As investors, understanding market cycles is key to making informed decisions for your retirement plan. One important cycle is the bull market, a period of rising prices and growing investor confidence. But what exactly is a bull market, and why should you care? A bull market is defined by a sustained rise in stock prices and an overall positive outlook in the economy. It signals times when optimism and growth prevail. Let's begin by exploring what exactly constitutes a bull market.
A bull market just means an upward growth-oriented market. It means the market's running up. It's going fast and steady, like they always say, like a bull is. It's the market we all like. It's when most of every day it's in the green. A bear market, of course, is when the market's opposite. It's slow, it's a larger fall, it's falling. I never got the phrase where the bear came from, but it's pretty much the market's in the red, it's going down. So bull is always good, bear is always bad, and then the market, as we know, it's a heart rate monitor. It can go up and down, but it's whichever way it's trending over the long term.
We often ask, what triggers the start of a bull market? Typically, improvements in economic indicators, such as high corporate earnings, increased consumer spending, or favorable government policies, can spark renewed confidence and set the stage for upward trends.
You have to be careful, but there is the conversation of everyone is normally worried to invest because they're like, oh, the market's at an all-time high. Well, look at over the last few years, the market hit a new high majority of every day of the entire calendar investment year. So when you're looking at a fiscal year, it's never too late to put money in, but it's about proper diversification and how much you're putting in over time. That's where dollar cost averaging comes into play. You're putting money in smaller increments over time, so you're eliminating as much of the risk as, hey, I put in 200 grand today and the market falls tomorrow. And it might come back up the next day, but it's going to be a lot easier if you're putting 2 grand in week, month, over time. You have less money exposed, but you're still building it up. So it takes away the risk of worrying about the color on the screen the day you go in.
While bull markets can last for several years, their duration isn't set in stone. A variety of factors, including economic fundamentals, global events, and shifts in investor sentiment, play a role in determining how long these periods of growth continue.
Isaac Newton was one of the biggest guys to look at for a case study when it came to trying to time the market. I don't remember the company as a whole, but he was investing in a shipping company, and this was the late 1700s. He put money in early, cashed out of it very quickly. He made a profit, but then within the same year, his friends almost tripled their investment. Well, he goes back in a lump sum, but he was close to the peak, and then the embargoes hit, and it tanked. And it was about him trying to time the market, and he cashed out at one of the worst losses of that time because of course, his substantial net worth. So you never want to chase the market. You never want to time the market because it only works when you don't try.
We just don't feel like when you move into retirement, that's fingers crossed. I hope that I have more ups than I do downs. That's just not a concern that we think our clients should have. We think that that's something that keep your nose to the grindstone, work with a fiduciary like we are here, obviously at Capital Financial, that has your best interests at heart. We don't have anybody to answer to that's behind the black curtain and talk about how much profitability that we may or may not have had. And so we do that, and we think that that's very important, because if you have that client and they understand as a true fiduciary that you're making investments on behalf of their family's account without any regard to how quote unquote profitable that might be, if I'm a potential client, that gives me a lot of peace of mind that I might be in the right place, and we think you're the right place at Capital Financial.
Understanding these market dynamics can help you align your investment strategy with broader economic trends. That's why you should partner with a team that can get you where you want to be in retirement. Coach Pete and the team at Capital Financial are ready to help plan for retirement and implement strategies to make your savings last. Take advantage of the no-cost, no-obligation financial review to understand the ins and outs for your retirement plan. A customized plan based on your wants and needs. Contact us today And be sure to like this video and subscribe to this channel for more retirement help.